This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode, a special market meltdown episode of DeFi Decoded. I'm Alex Tapscott here with co-host Andrew Young. Andrew and I are just going to talk through what's going on in the world today. It is Tuesday, May 10th. Global markets, stocks, bonds, crypto, you name it, taking quite a walloping. We're going to dig into it, share our thoughts on what we think is going on, talk about some recent events in the crypto space specifically, and see if we can try and make sense of the chaos that's happening all around us. So Andrew, let's kind of start there. So the headlines are all about the big Bitcoin crash. What's going on?
Yeah, I mean, essentially, Bitcoin is not immune to the broader market meltdown, particularly in tech stocks. Most tech stocks, a lot of them are down now over 60%. I forget the stat, but some crazy high percentage are now down over 80%. I think we had 2 of the last 3 days, 90% of the stocks have actually been down, which is a very rare event. And it's particularly hitting high beta tech stocks. And part of that is sort of the general crypto space. Bitcoin's actually been relatively, like everyone's talking about the Bitcoin crash, Bitcoin's actually been relatively performing well, I would say, relative to kind of its typical volatility. But the altcoin space is getting decimated. So it's kind of mirroring what's happening in the tech space, where Apple's only down sort of 20%, and then things like Peloton and these other high tech names are down 80 plus.
Yeah, I think that's a great comparison. If you look at the numbers in the stock market, the Nasdaq has had its worst quarter since 2008, since the financial crisis, and the worst month since March of 2020. So, which was the month of the COVID lockdown meltdown, right? So we're definitely in sort of some interesting times. Usually, those are good times to, not man up, that's a gendered term, but to get into the market, I guess. So it's an interesting time. And I think the point is interesting about Bitcoin too. Like all the headlines in the news are about the Bitcoin crash. I sort of said that giving you a quick wink because Bitcoin actually is down 30% year to date, which nobody's happy with a loss on their investment. But if you look at other big blue chip tech stocks, I don't know, Netflix down 70%, Facebook down, I think 45% year to date, and from the peak, much more. Even Amazon, which is considered, I think, by all accounts, a blue chip technology company, one of the largest corporations on the planet, the second biggest employer in the United States, down 35%. So Bitcoin's outperforming Amazon, a lot of these other names. But again, like you look past the large caps, and there's a lot more carnage going on in some of these in these smaller names. It's interesting, I believe that Bitcoin is going to emerge as a key store of value investment, but it's clear during this meltdown that it is very much tied to the Nasdaq, right? And it's very much tied to this sort of beta on off that we're seeing, and it seems to mostly be driven by, again, the concerns around inflation and that the central bank basically has run out of ammunition to fight this. Can't cut rates or pump money into this system when inflation is running this high. So the Fed put, which has helped to sort of underpin the buy the dip trade for the past 12 years, basically gone. And I think people are kind of reckoning with that. And it's causing mostly just fear to flood into the market. There's no real rational reason why, the shares of large, massively profitable companies should go down like 10% in a week. I don't think. So I think a lot of that's fear driven. But at least within the crypto space, there seems to be kind of a unique catalyst. I don't know what you'd call it. There's something that everyone's watching, which is UST, a topic actually that we covered on a previous episode of DeFi Decoded, the largest algorithmic stablecoin. So again, remember stablecoins like Tether and USDT and USDC are backed by financial assets that are held in the reserves of banks. And these algorithmic stablecoins are different. They're backed or collateralized by crypto assets held in smart contracts. And so there's been some questions always around, well, how sustainable is that? What happens if there's a high degree of volatility, or if the value of the underlying assets declines? What happens to the stablecoin? Does it lose its peg? Well, I think we found out this week. Andrew, so why don't you tell us about what happened? Get everyone caught up.
Yeah, it's been a really crazy, really 3 days, to be honest with you. It started Saturday afternoon, and then it really got crazy on Monday. And so as we talked about, Terra, which is a layer 1 blockchain, but with its main product being UST, which is an algorithmic stablecoin. Essentially what an algorithmic stablecoin is it's only partially backed by collateral. So sort of 3 categories of stablecoins, just to quickly go over them. The first is what are called fiat collateralized stablecoins. Essentially, for every dollar of stablecoin, there's a dollar held in a bank account, typically regulated, and essentially audited. And those have very little sort of risk, because at any point you can kind of convert the $1 stablecoin into a $1 bank account. But it comes with sort of the only problem is that it's obviously censorship and sort of now beholden to the banking system. The second category is crypto collateralized stablecoins. So essentially, for every dollar of stablecoin, there's typically sort of $2+ of crypto backing it up. If the crypto goes down, the stablecoin gets liquidated. Therefore sort of backing the currency. And then finally, there is
so an example of that would be like DAI, right? So
yeah,
over collateralized. So if you're gonna have a dollar value peg, you got to have more than $1 of some highly volatile thing, right? Otherwise, it's gonna dip below all the time.
Yeah, exactly. And then you have essentially the system of what are called keepers or oracles that are essentially making sure that if the value of the collateral ever gets below a certain threshold, typically it's like $1.50, then it's essentially the collateral is taken away, and that's how you prevent the system from sort of becoming insolvent. Finally, there's the only problem with that system is it's very capital intensive, not very efficient, which sort of limits its growth. So finally, there's a third category, which is algorithmic stablecoins, which have essentially never actually worked over a long period of time. Terra was a little bit different. They were partially collateralized. So I don't know the exact ratio, but it was about 30 or 40 cents of sort of collateral backing every dollar of UST. But then at the same time, it was also backed by the market cap of Terra Luna, which is like the actual sort of blockchain token behind it. So at any point, essentially the way UST is minted, you can burn $1 of Luna, and then you get $1 of UST, which you can then use in Anchor protocol and earn a 20% yield. So what's happened sort of over the last couple of days, though, is there was a rush of essentially people burning their UST to get Terra Luna, which they were then selling, which then drove down the price of Luna, which then created fears that UST was essentially unbacked, because it's essentially backed by the price of Luna. So so what that means, essentially, there's this reflexivity sort of characteristic with Luna. When the Luna price was going up, it made it much easier for there to be a larger and larger market cap for UST. So that's great on the way up. But then the problem is on the way down, which is sort of triggered by this recent market sell down, it works in the opposite. And so it gets very ugly very fast. And so the net effect is that the price of UST started to come under pressure and actually broke peg and went down to, I believe, a low of 60 cents, which is kind of crazy for $1 stablecoin. It's now since recovered to 90 cents because there's essentially talk of a bailout plan organized by some of the top crypto hedge funds in the world. But it's not looking good. No one really, there's been a huge loss of sort of confidence in the whole thing.
Yeah. There's a lot to unpack there. So number one is, in retrospect, I think there was a lot of concerns about the sustainability of this model. Obviously, the idea of creating an algorithmic stablecoin, essentially a form of dollars for the internet that are not centrally backed, that can be used by anyone, is an amazing idea, and one that deserves to be, I think, continued to, iterated on, experimented with, et cetera. But in this case, at least so far, it's proven to have created some collateral damage. I'm not sure if this spells the end for UST. People keep saying, well, it broke the peg, it broke the peg, and therefore, no one will use it again. I'm pretty sure Tether got as low as 85 cents at one point in the past, on some fears and some like short-termism. So we'll see. Like, I don't know that it's a done deal at this point. It's also worth keeping in perspective, like as big as UST is, it's still really, really small in the context of like global financial markets. And in terms of where I think this whole space is going, it's still smaller than USDT, USDC, and so the big centralized stable coins. So I don't know where we end up on that point. People said Ethereum was doomed after the DAO hack and then rolling back the chain, but that didn't happen either. So maybe it's growing pains. I don't know. That's trying to be the optimist in this kind of a situation. One of the concerns, though, is the knock-on effects to other crypto prices, right? So we've talked about some of these macro factors that are driving the value of risk assets down, and Bitcoin and crypto assets are getting caught up in that mix of things. But in this case, there's some concerns about UST and the foundation itself that holds a lot of these assets sort of in trust, I guess, for the stablecoin, having to like go through a forced liquidation. And one of the things that has been really high profile in the past little while is that UST is using Bitcoin as the backing for the stablecoin, right? So is there concern that there's going to be a sort of forced liquidation that is going to then cause the price of Bitcoin and other crypto assets that are locked in this to go down?
Yeah, that's a big fear. It's kind of funny too, because a lot of the Bitcoin community sort of embraced Terra and UST on the way up, because Terra is essentially using funds it raised to buy Bitcoin, just market buying Bitcoin.
Yeah.
And now the community is sort of turning on them now that they realize that it means on the way down they have to sell Bitcoin. I actually think someone was doing some on-chain sleuthing, and it looks like the Terra Foundation has actually emptied their entire Bitcoin wallet into Binance. It's unclear whether they've actually sold all of the BTC that's in their wallet, to sort of the idea being that they would sell their Bitcoin, use the sort of cash from that to then buy UST to try to restore the peg and restore confidence. But it's not really clear if they've sold all that yet. So we'll sort of see. They are also, I believe, Jump Trading, which is one of the largest market makers, if not the largest market maker in crypto, there's rumors that they're sort of organizing like a quasi bailout of the whole system. So essentially getting the top 10 crypto funds in the world to each put in sort of a large amount of capital to sort of shore up the whole thing. But yeah, I mean, your concern is definitely valid. It's just, we just don't know yet if they've actually sold all the BTC. And I guess they have some leverage in the sense that because they haven't sold all of it, it's like they haven't run out of ammo yet. I think one of the ideas that people keep talking about is that they should actually just sort of allow it to depeg dramatically, and then essentially try to buy up the UST when it gets below 50 cents, and that will actually help recapitalize the whole system, because they're essentially able to buy out people for much less than they effectively owe, and then sort of reemerge as a fully collateralized stablecoin with just sort of only half the market cap.
Yeah.
So there's a lot of different ways. A lot of people have actually compared it to sort of the early days of banking. They call it like Wildcat bankers, where there was no central bank to bail anyone out, and so competitors and sort of sources of capital have to come together and organize almost like an industry bailout.
I was just thinking that actually, like, there's a really great book called The Panic of 1907.
Yeah, I've read that book as well. Yeah,
where basically, like, it's so funny because the dollar values are so much smaller than that. It's the long and short is there was a big credit crisis, and this is before it was actually the reason the Federal Reserve got created, because they were tired of these massive financial panics happening every few years. But anyway, there was this huge financial panic, and basically the J.P. Morgan, the original J.P. Morgan, got everybody in a room and basically orchestrated a bailout, basically guaranteeing the debts of some financial institutions that had gone belly up, and there was stability once again. And this even happened in the 90s, sort of. You remember, long-term capital management was a hedge fund, and the Federal Reserve of New York organized the bailout, but the bailout was provided by the banks, who saw, their interests were protected in a situation where the financial system was stabilized. It's only really, I don't know, I mean, maybe this is incorrect, but it seems to me that it's only really in the last like 15, 20 years that like the idea is just like the government steps in whenever companies, blow themselves up. And that creates real moral hazard, right? Where it's like, well, I'm basically just going to outsource the risk because I can take all the risks I want and get paid my bonus and, buy my house in the Hamptons. And then when the music stops, the government will be there to backstop it and the taxpayer will take care of it for me. So it is interesting to see that, like, let me assure you, the Federal Reserve and Treasury Department don't give a shit about UST. Or if they do, it's only because they're going to use it as an example of why we need a centralized government-backed stablecoin and not something created by a third-party company or protocol. So in this scenario, you've got these entities like Alameda Research and Three Arrows and these others, like these big hedge funds in the US and elsewhere, that are looking to support this, because if they can get UST back on its feet, then the whole crypto space is going to recover, and that's going to help their portfolio companies and the protocols and assets that they already own, right?
Yeah, exactly. And another thing too, like Terra, a lot of these funds have large sort of investments in Terra Luna, I should say. And I believe the token's down 50% over the last 24 hours. So I'm sure that also hurts them in other ways. Terra's obviously got sort of an outsized influence in the crypto space. So yeah, it is kind of like a J.P. Morgan, like Knickerbocker 1907 bailout. Yeah. Just with SBF instead of J.P. Morgan. But
yeah, SBF instead of JPM.
Yeah. Yeah, it's pretty cool to see. To me, I actually think it's kind of the market working the proper way. Look, UST is obviously big. It's like a $20 billion market cap. It's not that big. It's not really, exactly. It's not systemic yet. There is going to be some losses that sort of ripple throughout the whole DeFi ecosystem, but it's not. If UST was 10 times the size, then that would have been a huge issue, like a existential risk, at least to the whole DeFi ecosystem, particularly because of the way UST is sort of pooled with these other currencies and this thing called the Curve 4 pool. And so as the price of UST goes down, it sort of hurts. It pulls liquidity from all these other stable coins.
Well, I was thinking that, like, I'm trying to think of the knock-on effects. And when it comes to like Bitcoin held in reserves, it's more like a hedge fund blows up, and to meet their capital calls or their loans or whatever, they have to dump everything that they own, right? So the dumping is like, oh, the shares of, like, do you remember that when this happened with Bill Hwang last year?
Bill Hwang, yeah.
With Archegos or whatever it was called, where basically like Bill Hwang went on an insane buying spree and bought up all these shares of like legacy media companies like what was it called, Viacom and all these other things, and then it was like the Bill Hwang peak and trough, and then all of a sudden he had to dump it all, and then those things got whacked and never recovered. And so Bitcoin is sort of like an asset in the portfolio of UST, in the sense that, okay, like if it really goes sideways here, they're gonna have to blow out all this Bitcoin. That'll be bad for the price. But that's a short-term thing. Like the short term is like, okay, well, but if the value, that's like the value goes down because there's more selling pressure and there's not enough, of a buy wall to scoop it up. But in the long run, it'll be okay. With the DeFi pools, that part of it is more interesting, because if you think about, pools where there's UST and some other asset bonded, in some like lending pool, that's going to cause that people to unwind, like to try and exit those pools. But there's like hold periods on that, right? So in some cases, so that might take longer and it might create a slower drip. It also means that the other assets that are bonded with the UST will also have to be sold probably. And when that happens, that's going to cause the value of a lot of DeFi names to decline. So that's and then because DeFi is so nascent, that could be more harmful to DeFi than it will be to Bitcoin. Like my view is always like Bitcoin is going to be just fine. But the question is, will that have an effect on DeFi? Your argument is like, it would if it was bigger, but it's small enough that it's not, right?
Yeah, exactly. I think it's not, some people might disagree with me, but to me, it's not yet big enough. And again, it's not going to fully melt down. They have, it's not completely unbacked. So I think I mean, we'll see. Like it's quasi stabilized over the last, I guess, couple of hours. But there's a kind of a classic case of this thing called New Bits, which was one of the very first, I think maybe actually the first algorithmic stablecoin, which had a 50% dip and then survived, and then within sort of 18 months had fully collapsed. So this does happen where there's sort of a stress test, but I think the damage is done in terms of confidence. So I think this is going to sort of severely limit its ability to ever get to that sort of big enough level to cause systemic risk everywhere. I think one thing that this could do, because it is big enough to somewhat be on the regulator's attention. And so I actually just saw a article come out from the Block this morning saying that Treasury Secretary Janet Yellen actually pointed to UST in asking for new stablecoin legislation.
Yeah.
I'm just kind of curious, what do you think of the downstream impacts that maybe this episode has with sort of regulators, and how do you think, I'm just kind of curious how you think this, whether it's big enough to actually impact things, or is it just kind of another antidote for them to point to?
A great question, and I don't know that I know the answer in its entirety. Couple of knock-on effects. Number one, we don't know if UST will recover, so maybe confidence is forever lost, and this particular stable coin runs, never grows beyond 20 billion, or maybe slowly shrinks, versus like it blows up. I think it probably has a cooling effect on new algorithmic stablecoin projects. I think the market is probably a lot less likely to support those or to trust them after the episode that we've gone through. I think that issuers of centralized stablecoins like USDC are going to capitalize on this, as they should. They have a different model that works. It's different. It doesn't have some of the benefits of algorithmic stablecoins, but clearly also doesn't have some of the risks, right? So there's an argument to be made that this could strengthen the hand of centralized stablecoins. Of course, they're unlikely to grow significantly in a market where the crypto market is collapsing, right? So in the context of the market, we'll see how that goes. And I do think that it's going to definitely, as I mentioned earlier, strengthen calls from regulators to, create, if not only legislation, but also some form of central bank digital currency. Basically a USDC issued by the Federal Reserve, right? Or by the Treasury, I guess would be the Treasury. They'd be minting the coin. So it would be certainly something that I think will rise in prominence as a concept. Now, whether or not any government is going to execute on it is a different matter. And then the final piece is, we know that there are some lawmakers in the US who would like to see stablecoins, even centralized stablecoins, fall under the banking umbrella and basically only be, federally regulated banks that can issue them. And I don't know if that will benefit from this as well. So I think there are a lot of unknowns. I think probably, this episode is the kind of thing that happens, when markets tank. It's not the reason why it tanks. It's always like, there's always I don't want to make, I won't even make the comparison, but like certain kinds of things get revealed or exposed when the market really crashes, right? Like it's the old Buffett quote, when the tide goes out, you see who's swimming naked kind of thing. But it's not the reason for the correction. The reason for the correction is everything else that's going on in the market. So if anything, maybe it's a signal that we're at the nadir or the bottom of this market. We'll see. Yeah,
totally. I think I don't really know what's going to happen. I think it's tough to what's one thing I kind of wanted to point out actually also is what's interesting is the success of Terra and UST has prompted a number of competitors to announce plans to launch a similar product. So Tron is launching their own sort of UST, and then Near Protocol is launching this thing called USDN, or USN, I think. So what's really interesting is they sort of announced it, and then 1 week later, UST is collapsing, and I believe they were going to be even more aggressive in terms of like the subsidies they're going to have. So one thing that's going to be really interesting is, does this sort of scare off these projects from really going all in on their own stablecoins, given that the game has sort of collapsed a bit? We were kind of talking about this earlier on one of our other episodes. I think protocols, I understand the urge to sort of create their own stablecoins, but I think it's better to maybe separate church and state, and have sort of a third-party protocol similar to what MakerDAO is doing, create a crypto collateralized stablecoin, just so that it doesn't have this sort of systematic risk across the whole chain. But it's tough to know, really. Everything's moving so fast. So
yeah, I would say that any of those other like imitators that we talked about on a previous episode are probably not going to have much of a successful launch for the next little while, to be honest, until the dust settles on all this kind of stuff. But yeah, who knows? I mean, I don't want to pretend that I know what the future holds for any of these. The fact is, Bitcoin began as an experiment in monetary policy, and centralized stablecoins began in a similar respect, and Ethereum began as an experiment in decentralized computing and application development, and here we are. I mean, in 2 years' time, you might be looking at Luna and UST as that early crusader that blew up, but then something else better came along, or they could recover and they could become the dominant player once again. I really don't know. So sorry if anyone's looking for a crystal ball here. It's a bit of an open-ended subject, but a super fascinating one nonetheless, and one that I don't know. I feel grateful having someone to talk to about it and try and make sense of it, Andrew. So appreciate that. I think that's all we got for today for DeFi Decoded. We'll be back next week with guests, but whenever these kind of big things happen, we like to just sort of dig in and chat about it. So in a week, we might be talking about the same thing, or we might be talking about something different. But no matter what, it'll be interesting. So thanks again and take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.